As inflation continues to rise, not just in grocery stores, but in the housing market and vehicle market as well, concerns are being brought up about when prices will finally stop trending upwards. Today, we are speaking with Shawn Narancich of Ferguson Wellman about these inflation concerns. Shawn, thank you for taking the time to sit down with us today.
Thanks for having me, Caleb.
All right, so just jumping right in, inflation is a big concern for a lot of us right now. If consumers were to start curtailing their spending, how would that impact recovery?
Well, certainly it would, because the consumer is the biggest part of the U.S. economy, roughly two-thirds of economic output. And so if consumers become more price sensitive, particularly on big ticket items like cars, house prices, again, the inflation issue is across kind of across the board. And so the good thing that the economy has going for it is that that the U.S. consumer is, for the most part, gainfully employed, and so they have that spending power, which which is the bedrock of their ability to spend.
How will inflation impact what the Fed does with interest rates?
Well, inflation definitely has the Fed's attention at this point, and the Fed's been a little bit behind the curve, I would say we would put forth with regard to interest rate policy. So the interest rate hikes are definitely coming. It's kind of a question of how fast the Fed decides to raise rates. And but the quantitative easing program, injecting cash into the economy like they've been doing, that's in the process of being curtailed. And again, we expect the first of the Fed's interest rate hikes to begin next month.
All right, Shawn, thank you very much.